Hey, welcome to the Explainer. Today, we're going to tackle the real heartbeat of any business's finances, the accounting cycle. Now, I know that might sound a little dry, but stick with me. I promise you're about to see it for what it really is, the story that every single company tells with its numbers. So, just picture a business for a second. You've got sales coming in, purchases going out, bills getting paid. It is a nonstop flood of financial events. And without a system, it's all just, well, it's noise. It's a total mess of data. So the big question is, how do they make any sense of it? How do they find the actual story in all that chaos? Well, the answer is the accounting cycle. You can think of it like the grammar for the language of business, right? It's the rule book that takes all those individual, chaotic transactions and organizes them into a story that actually makes sense, a story that anyone can read and understand. Now, every good story needs a plot, a sequence of events that builds up to something. The accounting cycle is exactly the same. It's got this clear, logical flow, and we're about to walk through the 7 essential steps that make up its plot. Okay, let's break this down. It all kicks off with identifying a transaction. Did we just make a sale? Did we pay a supplier? Then we record it in a journal, which is kind of like the company's daily diary. After that, we post those diary entries to the ledger. This is where we organize everything by category. So all the sales go in one bucket, all the expenses in another. Next up is the trial balance. This is our first big check-in to make sure the math is, well, mathing. Then we have adjusting entries. These are for things that don't happen in a single day, like equipment getting older. And this all leads up to the grand finale, preparing the financial statements. This is the actual story of how the company performed. And finally, we close the books, which is basically ending one chapter so we can get ready to start the next one. And this is the really crucial part. The cycle never actually ends. It's a continuous loop. As soon as one period or one chapter of the story is closed, a brand new one begins. This is what makes sure the financial records are always current, always telling the truth about what's happening in the business right now. So why do we go through all this trouble? Well, it boils down to 3 huge things. First, consistency. So you're using the same rules every single time. Second, accuracy. So you know the numbers are legit. And third, comparability. This one is key because it lets you put this year's story right next to last year's, or even next to a competitor's, and have it all make sense. This cycle is really the engine that keeps everything honest. All right, so we get the process, we know the steps, but now let's talk about the payoff. Because this isn't just about shuffling papers. This is about turning raw data into real-world, powerful business decisions. This is where the story gets really good. And to see this in action, let's look at an absolute giant, Walmart. I mean, think about it. They have millions of transactions every single day. How on earth do they keep their story straight? Well, technology has basically put the entire accounting cycle on steroids. For a company like Walmart, this isn't some monthly task. It's happening in real time. Just look at this. Every single time an item is scanned at checkout, boom, that's instant transaction capture. The sale is recorded on the spot. Their ledgers are updated automatically, so the records are always, and I mean always, current. And the outcome of all that? Management gets data that's up to the minute, not weeks old. And what do you get from a high-speed cycle like that? You get incredible business agility. Management isn't sitting around guessing what's happening. They know exactly what's selling, where it's selling, and how it's affecting the bottom line, right now. This gives them super precise financial control and allows them to make smart, fast decisions that keep them way ahead of the game. Okay, so we've followed the plot of the financial story all the way from a single transaction to a massive business decision. So let's wrap this up. What's the one big thing you should take away from all this? So why does any of this matter to you? Well, because the accounting cycle is the invisible backbone of a trustworthy economy. It's the system that ensures that when a company says they made a certain amount of money, we can actually believe them. It's what makes sure they're reporting their performance accurately. And maybe most importantly, it's the magic that turns that chaotic flood of data into a story that we can all follow. So the next time you look at a company's financial report, just remember the cycle that built it. Remember, it's so much more than just numbers on a page. It's a narrative, one that's been carefully built, chapter by chapter. Which leaves us with one last question to think about. If every company tells a story with its numbers, what story is it telling you?